friends who are working in the banking industry and just ask them a simple question. Do you know how banks make money? Hello everybody. If you look into this chart, it's very obvious that HDFC is the biggest bank in the country. The top line sales 45,000 crores in the last quarter. Compare it to all the other banks, the next biggest one ICICI is 31,000 crores. Then Axis, Kotak, all of them way below that. Very obvious it's the biggest bank. But how can we say this is the best bank? And for that, we need to understand how banks make money. If you believe that, hey, all the banks make money by borrowing from the depositors and then giving out vehicle loans, home loans, etc., then what's the difference between all these banks? Why are some banks valued more and why are some banks valued less? Because it's not how they make money. Lending and borrowing is not the only thing that banks do. There is a lot more to the story. Let's go back into the basics to understand how these banks actually make money and how do they differentiate themselves. And that will help us understand which is a better bank. Now let's start with a simple example, HDFC Bank. HDFC Bank, imagine, has 40,000 rupees in its account right now. It probably borrowed from multiple depositors. Now this 40,000 rupees, it is giving as loans to 4 different corporations and people or 4 different entities. Number 1 is a spare parts manufacturer for Maruti. Let's assume they manufacture gearbox and tires. And then it is giving out 10,000 as loan to Maruti itself. And then at 10,000 to the dealer, the showroom dealer who is selling Maruti cars, and subsequently another 10,000 to the customer who is looking to purchase a Maruti car. Now this is an ecosystem where the trust is coming from Maruti, the brand Maruti itself. Now then how does this entire ecosystem work? The spare parts manufacturer takes the 10,000 from HDFC and then he starts manufacturing these individual modules, individual gearboxes, tires, and then he's selling it to Maruti. And then Maruti has taken the loan from HDFC. It says that, hey, I did not sell anything, so I need that loan. So HDFC has given that 10,000 loan. The day before it has to pay back to the spare parts manufacturer, it is paying back to the spare parts manufacturer and then they come back and pay back that loan. So now it was 0 rupees in HDFC's bank account. The spare parts manufacturer paid back 10,000 rupees. Now what Maruti does is then it assembles and it gives to the dealer this car. And the dealer has already taken 10,000 rupees as loan from HDFC. So the dealer pays back the 10,000 to Maruti and Maruti is now coming and paying back that money to HDFC. You can see that 40,000 rupees distributed to different people in the ecosystem and the same money is coming back to HDFC but probably from different bank accounts. End of the day, HDFC Bank still has that 40,000 rupees. How? Let's say the dealer is giving back the 10,000 and then the dealer is giving the car to the customer and customer is paying 10,000 back, so the dealer is giving back another 10,000. Let's assume this customer is probably from another ecosystem of HDFC or from the same ecosystem of HDFC where is probably he or she is working for Maruti and their salary account is also with HDFC, right? So that salary account goes into the customer and that customer is paying back then again this 10,000. Well, I'm simplifying this a lot, but the fundamental point that I am proving here is that banks never let the money go out of their ecosystem. And when there are leakages, then that's a problem for the bank. And how do these leakages happen? During the pandemic period, there were not many sales. People did not receive salaries. So a lot of people started defaulting on their loans. They said to the HDFC Bank, ICICI Bank that, hey bank, I do not have any kind of money with me right now. So I'm not able to pay you. And that's a default, that's a non-performing asset for the bank. So if it has given 40,000 as loans, then how much does it have? Probably 20,000, 30,000, that's it. And that is not a good situation to be in. Hence, what these banks primarily do is they try to give out money where the person themselves is creditworthy. And the additional thing is the ecosystem in which they are operating is also creditworthy and it is trustworthy. And this ecosystem play is played by HDFC a lot. And that's the reason why if you compare the NPA of all the banks today, the non-performing assets are the least for HDFC. Not just now, if you go back into March 2020 and check which bank had the least non-performing assets, it was HDFC. While some of the banks touched 10%, 10% is huge. As an NPA number, HDFC was still in 2% and 3%. That is the level of how much diligence they are putting into when they are giving out a loan. So how and what is this bank calling themselves? HDFC Bank is nothing but a collection department. They make sure they are giving money, they are taking money and all that stuff, but end of the day, they are making sure that people are paying back that money as well. That's the job of a collection agent. And the better the collection agent, the better the bank is. If you look into what is happening in the current fintech scenario, number one, these fintech companies are making losses. How can you make a loss if you are lending money to somebody? If you have a deposit, if you lend it, you need to get that money back, right? If that is not happening, then for another 10K of loan, you need to go back and figure out and find another borrower. And that's right now the venture capital funding. But once this venture capital funding dries down, where is the business model for these fintech companies? If it's a tech company, we completely understand. But if it's a fintech company, this is what they need to do. They need to become better collection agents. The second thing we need to now understand is the money, that 40,000 rupees, is working for the HDFC Bank at least twice, thrice, 4 times, 5 times, n number of times. Now the 40K is back, it has generated interests from these 40K, and subsequently it is giving back this 40,000 probably from another ecosystem for 4 different players, which is great for HDFC, right? Because the same 40,000 rupees, it is generating additional income once again, additional interest income. If your money can generate more money, this is what exactly this example is. That's the best possible outcome. You keep your 40,000 in your bank account, you probably go and invest, where the 40,000, the NPA, the default rates, the possibility that you don't get back that 40,000 is absolutely low, then that's a great investment. And that's what we keep talking about, money making more money. Now, the third thing that you also need to understand is, in the economy where recessions are about to happen, a lot of people losing jobs, a lot of people do not have that money in their deposit accounts, they are going and looking out for that loan. They are going for that credit. In those situations, the banks which are actually performing very well with their NPAs are the ones which will succeed, because these banks have the collection agents who can bring that money back into the bank again. So the default rates would be low. And that's the reason why I believe HDFC is actually poised for better growth compared to all the other banks. It has nothing to do with, hey, how digitally equipped the bank is, or hey, how great the bank people are, nothing but hey, the collection agents in these banks are really good. I hope this video makes sense. Please do share it with your friends who are working in the banking industry and just ask them a simple question. Do you know how banks make money? And if they say it is by just borrowing and lending, that is absolutely wrong. They make more money by making money work itself and collecting that money back. Please do press on that like button and also subscribe to the channel. Do let me know if you have any feedback. Thank you guys, take care, and I'll see you again tomorrow. Bye-bye.